Good day. Ira Epstein of Linn and Associates with your metals market wrap-up for this Tuesday, the 25th of August, 2020, about 6:15 p.m. Central Time. Well, we're getting popped tonight. Not sure that means very much one way or the other, but the market said I think it's saying that those old lows there, the 1918 level that we've tested recently in gold, maybe that's an area it wants to find support. Silver 30 cents higher, telling me, first off, it's not getting the wild $1.50 ranges again. I told you that was going to end soon and the market will get more tradable, and that's where I think we're at. Frankly, I think we're at the point in the metals where those crazy days are behind us unless some event that we don't understand comes out of left field. We could get that with this coming Thursday's opening of the Jackson Hole Symposium, where Fed Chair Powell will kick it off, and of course we'll hear a number of central bankers offering their views, their opinions, how they're going to handle their regions in the U.S., regions around the world. What are they going to do? It's going to get interesting. GDP coming out this week. Now we're dealing with, of course, the newest hurricane, Laura. So Laura's coming to town, and boy, she's packing a wallop. Looks like a hurricane category 3 might be there. All right, up day in the stock indices. So let's concentrate on the metals and see what they're offering. We've had a heck of a break since the 2010 level. We got as low as you can see here right now on the continuation chart. We're at 1911.80. That's the continuation of the weekly chart. So we've had a $100 an ounce break in plain English. In round figures, 5% or so, nothing that's super big. In addition, we have not broken out of this pattern that I keep bringing to you. These extremes we have stayed in, if you think about it, the greater part of this whole month. Right at the beginning, in the first week or so, we made that, and then after that, we've just gone sideways overall. When we put the swing line on this, you've got a pattern of lower highs, and if we take a look at the low, this low right here that I'm pointing to, not the 1910, but this one, that's lower than that low. So we have the lower highs, lower lows, which is bearish. As I told you, I thought that 1918 zone was fairly important, and it is right here. Should the market be able to get up and clear the 1970-30 zone, that would be an indicator that the market has run its course on the correction. I'm not saying it's going to do that. I'm saying, to me, that would be an indication of it. In terms of Bollinger Bands, should the market try to flush out under the 1900 level, what the market's doing, somewhere in between 1890 to 1895 and a half, the Bollinger Band bottom, I would expect the market to find good support. If it wanted to just keep washing out, well, I guess you could argue the 100-day average, but I'm not expecting that to occur. That doesn't mean it won't occur. It doesn't mean the trend isn't down. That's all in place. When I look at momentum, this is why I'm questioning it. We're not even trying to lock in downside momentum. We simply have gotten ourselves into a situation where the market is worked down, it is oversold, it has done an effective job of washing out people that bought in this market all the way on this surge and maybe didn't know how to come out of longs. That's what I think we've done. Again, downtrend, oversold, bias down. You need to get over 1970-30 to negate the downtrend. That doesn't necessarily start an uptrend. And in terms of downside, first major support around 1895 and a half. On this break, the silver has not lost to gold. That is a good sign for the silver market and a good sign for metals as a whole. When silver can hold up against gold, most markets that I recall, and I've been at this 51 years, and trading metals probably 30 years, it generally says that you're in a good shape of a metal market. You're not in a real bearish configuration. When I look at silver, the trend is down. You've got the lower highs, the lower lows. I think the bears are in control right now. It's with their resistance number at 27.13, the 18-day average of closes. The risk is rather large from here, though. If you hit 27.78, you negate the downtrend. If the market decides to belly down, just let go, I'd look for the 24.97 zone for the support. Unlike gold, you're not even close to oversold. You're just working yourself down. So these markets are in tandem right now, but silver's not losing on a ratio basis to it. In the copper market, what I like is that while the market is corrected, and again, the first challenge of the upper Bollinger Band was so important, and that's where I think the pros took money off the table, and they're in the driver's seat now. They're waiting to see what do they want to do next. The market's not throwing out sell signals because it's not under the 18-day average. Even if it got under it, back up to here, the risk just on a single contract, the way that I teach charting, would be over $2,500. That's of no interest to me. And when I look, you're not able to get under that average, so you're keeping the bias up. As for the market momentum, well, it has gone sideways basically now, and it's no longer in overbought territory. It's a market looking to see what next. In the platinum market, we have a pattern of lower highs. We have the lower lows. The resistance is 960.20. You can see that you're in an oversold market. You went to the upper band. You found resistance in that zone. You fell back to the lower band. You found support at that zone. That's what I'd expect. And you're sort of in the middle of nowhere. But the bears are controlling what's going on, not the bulls at this point in time on this gold, the silver, and the platinum. In the palladium, too, you've got a pattern of lower highs, lower lows. You've entered what we call a pipe. It's when you take the Bollinger Bands that were so wide and they start narrowing, and in the process, what they really do is hang on to the 18-day average, and you're compressing all the volatility. So suddenly, instead of a market getting super volatile going from, let's say the 2550 level rather, back to 2100, bingo, you got very tight ranges. The markets are getting more normal. That's what I want to say in the metals. That's my interpretation of them. In the dollar index, I'm looking for failures right at the 18-day average. I have told my currency traders for my paid subscriptions, this is a dangerous time to be a hero in metals when all the central bankers are going to speak in 48 hours. You know, what do you want to do? Walk into a freight train? You don't know what's going to be said. I wrote in my evening report, though, and in my morning, what I think the bankers will do, but that's why they pay me the big bucks, not you. So I won't tell you what I told them. But that's what I'm expecting right here. So you put it together, you learn these indicators, and that's what I'm here to teach you. Our good friends at Modern Trader put together 2 different brochures that I think explain, be it the charts, the different chart patterns, the oscillators you work with, the chart lines that you put on it. What are moving averages? How do you work with them? What types are there? Market sentiment, some people like that. I'm not one for that. Some people like to look at spreads, forwardation, contangles, what do you got on the market? Do they tell you something? You know what I've learned over the years? Everything helps you with a little bit, but sometimes you get too much input, you don't need it all. Interesting. How do you get this, though? And you should get at least the basics to understand it and then decide what you don't need. Go to our website, www.iraepstein.com. On the right-hand side, you will see free offers. Sign up. I'm Ira. You have a great day.